The OECD has come out with projections for this year. They're not good. They're saying that the Eurozone economies as a whole will contract 0.6%. That's after a 0.5% decline in 2012. But I'm wondering, is it a more nuanced view when you look at the various economies within the Eurozone?
Yes, there is. I think there's quite a disparity between performance across the individual member countries of the Eurozone. So at one end of the spectrum, you've got a country like Germany, which is not doing too badly. Growth has outperformed most of the other countries across the Eurozone. And then on the opposite end of the spectrum, you've got the peripheral economies like Greece, Italy, Spain, Portugal, which are really struggling, and their economies are still contracting at a pretty rapid rate, and you see that reflected in the unemployment numbers.
Is that divergence within the economies of the Eurozone actually growing?
I'm not sure that it's increasing from where we've been over the last couple of years, but it's certainly a very dangerous trend and frankly unsustainable trend. It's in fact a deadly threat to monetary union in the long term. We can't carry on with these kind of divergences and huge increases in unemployment in the periphery and it being either economically or politically sustainable.
How does this divergence affect the prospects of a recovery within Europe as a whole?
Well, in itself, it doesn't affect the aggregate Eurozone number. I mean, that's just an average, of course, but what it does is drives a wedge between the different countries politically, and it increases the difficulties of achieving agreements on policies that will help monetary union survive in the longer term.
And could you give me an example of some of those policies that are endangered?
Well, I think essentially the concern in the core countries like Germany and the Netherlands is that they're picking up the bill for all of this. And so to the extent that things are getting worse in the periphery, it makes them even more reluctant to put more money on the table. They want to see action from the periphery to improve the structural performance of their economies. There has been progress made, but they would say not enough, and that's why there's a bargaining process going on between the core and the peripheral nations.
Now, what are you seeing in terms of investment flows coming into Europe?
Well, it's obviously had a pretty dramatic effect over the last few years, and we had a phase where there was a huge withdrawal of investment, particularly from the peripheral economies. To some extent, that was to the benefit of the core countries, but also to some extent, money was being taken out of the Eurozone as a whole. What we've seen over the last year or so, since the European Central Bank stepped in with its famous pledge to do whatever it takes, there has been a turnaround, and of course we're now in a situation where some of the peripheral markets have gone from being real distress situations to being merely depressed, and people are looking at the valuations and wondering, should we start now to dip our toe in this water and maybe put some money at work into the periphery? And that's obviously partly a calculation based on whether you assume that the politicians will be able to deliver on their commitment to prevent a breakup of monetary union.
And does this include actual deals, acquisitions, or are we just talking about investments in the equities market?
I think to some extent, I think it's still early days on that, because of course if you're making that kind of commitment, you want to be pretty confident that you're not going to be faced with some kind of major tail risk like a default or an exit from monetary union. But I think people are looking at this very closely, and of course the countries concerned are very keen to encourage people to put money at work, and of course the governments are in the business of selling assets. And so I think the kind of thing that people are looking at are, if you like, the relatively safe things. They're looking at things like infrastructure that have a good sort of income stream. And so we are beginning to see people, running the rule over some of these companies as well.
So Mark, thank you so much for taking time to talk to us today. We appreciate it.
My pleasure.